Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Air Canada. Now they just released their Q2 2024 earnings. Stock has been under a lot of pressure lately. Now recently, as we all know, they updated their forecast for the year. This came out, I don't know, was it like a month ago? We're going to go through their earnings today, but I just wanted to quickly read this for you guys. The updated forecast reflects the lower yield environment, less than expected load factors for the second half of the year, and competitive pressures in the international markets. Canada's largest carrier said on Monday. So basically, what they're saying is they now expect 2024 adjusted earnings before interest, taxes, depreciation, and amortization (EBITDA) to be in the range of 3.1 billion to 3.4 billion dollars Canadian, and this was compared to the previous forecast of 3.7 to 4.2 billion. So that's why we've seen this stock drop. It was even in the high 14s here recently. Today it's up about 2.75% over yesterday's earnings. It's tightened its unit cost forecast and now expects its full year adjusted cost per available seat mile (CASM) to grow 2.5 to 3.5%. And of course, this was compared to 2.5 to 4.5% before. So again, with this stock, I made my last video on this one. You guys know what I think about this. This stock, even after today's little move here, it's about $5.5 billion market cap. The last 4 quarters, they've generated roughly $20 billion. They're paying down their debt. They've got roughly, we're going to get into this, $8 billion in cash. I'm still scratching my head at this stock. But this quarter wasn't as great as they wanted it to be, but it by no means was really that bad. Growth wasn't great. So we're Q2 2024. I also put Q2 2023 here as well, so you can compare on a year-over-year basis, and then the last 4 quarters here. So Q2 2024 here, passenger revenue is $4.99 billion. That's pretty significantly good. I mean, Q3 2023, of course, was better than that at 5.8 billion, but that shows a year-over-year increase of about 1.82%. Cargo revenue was up slightly from last quarter, $230 million. It was up 1.32% year over year. Other was 299. That dropped a bit from last quarter, and it was completely flat year over year. So their total revenue was $5.5 billion for this quarter, and that's up about 1.7%. Year over year here. Net income was $410 million. We had a loss last quarter, and of course, year over year, it hasn't been the greatest. That was down about 51%. It was 838 million a year ago. EPS is getting stronger to $1.04. That's down year over year, but still, it's nice to see them making money after all the stuff that they've been through. Cash, we're seeing about $8.1 billion, is down 5% roughly year over year. They remain pretty constant on that. And again, they have way more cash in their value of the value of their company, even though that they have debt, right? Going in a little bit more into details here, like we've spoken about here. Here's their income statement. Passenger revenues 4.9 billion. Cargo other total revenues were about 5.5 billion dollars versus the 5.4 a year ago. In terms of their operating expenses, this is kind of what hit them. The total operating income was 466 million versus 802 million dollars a year ago. So we can see some of the things, of course, since they're flying more and stuff like that. 1.3 billion versus 1.1, that was a pretty significant expense. Salaries are up there a little bit as well. So there's a couple other things that are back and forth. But their operating expenses were relatively significantly higher, over $5 billion versus $4.6 billion a year ago. In terms of their, let me back it up here a little bit for you guys. In terms of their non-operating expenses, it was kind of interesting this quarter as well. They were a little bit different there. $2 million loss versus a gain of $251 million a year ago. Also, we were looking at interest expense, went down quite a bit. Financial instruments as well at fair value, the way that they recorded some of their, if I believe this was to do with some of their hedging, was less as well. So the total non-operating expense was an expense of $62 million versus $6 million a year ago. So that helped them out a little bit. So of course their income was 410 versus 838. So the big difference here being, I think the difference mainly in their operating expenses. And we'll talk a little bit more about that. terms of their balance sheet, like I said, they got about eight. I'm not going to put in my head there was $8.132 billion in cash. Nothing else too interesting, but good balance sheet. Total assets of 30 billion versus 29.1 billion in terms of liabilities. So yeah, overall, I think it's pretty good. There wasn't that much on this conference call, really. Of course, they talked about how they were disappointed in the stock price, and I think we've all been pretty disappointed in the stock price. Um, they seem to blame a lot of regulations. I think I talked about this before as well here. They're saying an increase in cost of 20% since 2029 or 2019, and they're blaming this basically on government policies. Um, so the guy being the way that it is, I think it's pulling down the stock a bit, but they have talked about being a little disappointed on the stock price. And specifically, just like last quarter when they were talking about potentially sound like maybe buybacks or something like that, they alluded to that again on their radar because they think their stock's cheap. Does that mean a dividend? I don't know. But it'd be interesting to see if something actually materializes with that. So also on the conference call, they said international revenues contributed largely to the revenue increase. In terms of a guidance, they expect their capacity to be up about 5.5 to 6.5% for the year. And a lot of this, they keep talking about modernizing their IT to grow the airline. So next quarter, they're saying expect some weakness next quarter, but it's going to be the strongest quarter of the year. So anticipate that, and maybe that's why the stock's up a little bit as well. Also, if you recall, if you've been watching my videos for a bit, for the longest time they weren't hedging, but I think it was probably the last 2 quarters or so they started actually hedging, and so fuel prices including a hedging loss. But the expenses mainly increased due to capacity, like we saw on their income statement there. So sometimes hedges work, sometimes they work in your favor, sometimes they don't. So the fuel prices included a bit of a hedging loss as well. Like I said before, they've blamed a lot of this on the government policies, basically hampering them. They didn't say much more else other than that, so I'm not too sure how much to read into that. But another thing that I think is definitely hampering the stock here is that they're still negotiating this Pilots contract, so we don't know what's going to come out with that. And I think that's something that's definitely hurting the stock prices, that uncertainty in the stock that investors generally don't like. But again, sitting here at $15 a share, the PE ratio is 3 point. If this is accurate, I have to double check 3.42. It's kind of insane. So of course, I still continue to hold, but this is just a very unfavorable stock still to this day. I'd love to know what you guys think about this, though. Put your comments down below, and I'll see you in the next one.